All right, GU on July 9th. These are the two trades I took, and we're going to be looking at the reasons I decided to take these trades and what motivated my bias for those positions. So, important thing that needs to always be done every single day is identify the structures. Why? Because every single trader in the industry trades with structure, right? Really important, like we discussed on the webinar. How can we identify structures? Pretty simple. Structure consists of having higher highs, higher lows, lower low, lower highs, whatever, right? So in this current price action, we can see that price created that huge downwards structure, right? We have this point and this point. Now price creates what we call a higher low, right? And now we can see that price moves and breaks this structure here and creates what we call a lower low. Again, with the same intention, we have a higher low. And then price moves lower again and creates this lower low. So this is pretty basic beginner stuff. A lot of traders today still trade that way. I personally don't, but I still look at it because it's important to understand how people trade, so I'm able to position myself against them. Afterwards, we have price that pushes higher and creates what we call a higher high. What happened here, right? This is what we call a change in character. So we had what they call also a structural shift. So for them, their bias actually changed because price decided to change his structural trend, right? So at this point in time, if we have price that made a new higher high, we can already know that it's enticing new people inside the market. Who? It's simple. There's only two people that are either interested to short or buy, right? So at this point, we had that structural shift, right? Structural shift. So this means we have people, right, every time it's making a new high, trying to enter, okay? At this point in time, we can at least know that we would have potential buyers inside the market, right? So this is how we can properly identify a trap, right? The same way that we can have people trying to enter here every time price creates new highs, right? So this is the first evidence that we have that price is trying to entice people to enter the market. Remember, relevance in liquidity is where there's actually no doubts that people are entering. The same way I discussed the other day, when we have equal highs, a lot of beginner traders think that automatically when there's equal highs or equal lows, there's stop losses here located above those highs. Remember, every trader are structural trader, so we need to have that lower low or that break of structure or that candle closer below that low to entice them to enter, right? That's the way they trade, right? So it's exactly the same thing in here. So if people are interested in entering after that structural shift, then price needs to close above and entice buyers in. The same way it creates that break of structure, etc., etc., right? So we have our first evidence that price is being manipulated at this point. So this creates what we call relevance in the liquidity, right? Why? Because we know that it created a new high. It's enticing buyers in. This point led to the new high. There's a valid trap identified here. And that's pretty simple stuff, right? The same way that we had also these guys here creating a new low, validating the relevance and the liquidity. But let's forget about that for now. So when price confirms a trap and relevance in the liquidity, we know that we might potentially have trades, opportunity based on liquidity being taken. And this is exactly where you see me taking those trades, because we know that relevant liquidity has been taken, right? But now a lot of people think that if this point made a new low and created a new low here, that there's relevance in the liquidity here. Actually, you guys aren't wrong, but remember the story behind the whole purpose of that move. This point has been enticed to take also the liquidity on the left. And the only thing they do here is they come back and they mitigate their liquidity that they took from here. Because a lot of people oversimplify liquidity. They think that, this is done, so we have an entry and we target the highs, right? If it would be that simple, we will all be billionaires, right? Your goal is to properly identify the liquidity based on relevance. Because let's be honest, almost all structural points resides in liquidity, but our goal is to identify where the masses are. Because otherwise, at every structure, you would take a short or a buy, right? Doesn't make any sense. So the only thing I did is when price liquidated the relevance and the liquidity, I took a position based on that reaction here. And the same thing with my short is I understand that this did exactly the same thing that this does, but from the left. A lot of people just think that if we take here, we're going to take this because this took here. This is a little bit oversimplifying how the actual market works, and that's why I wanted to make a quick clip and showing you exactly the kind of subjects we will be discussing in the trading shelter. It's not about showing you the strategy or the way we trade. It's most of all trying to show you exactly how to align yourself in the market and stop being trapped. Because a lot of you guys have basic knowledge on how to enter trades, and it's enough. But you're not able to position yourself properly to trade in line with the liquidity. it's really important to be able to, first of all, identify relevance in the liquidity, and also understand when they're being taken. So, to repeat myself, first of all, you have to understand where is the relevant liquidity by understanding structural points, break-off structures, everything that the regular trader use, and then you need to align yourself either with it or away from it. I hope this clip was helpful. My goal wasn't to go into details. It's more so to show you exactly that, yes, those peak trades look impressive. If we take that trade here, it was this, like this. This looks impressive. But if you look at it, simplifying it the way I explained it, it's actually pretty simple. It's just a matter of understanding where is the remaining liquidity, and are we trading in line with the liquidity, or we're trading away from a liquidated liquidity. So, catch you guys in the next video.